morning, class. Welcome to Homeroom with Unk and Market Monk. Morning, P. How's your week?
Really good. Just a lot of stuff on autopilot, like the oil and materials, and then just some follow through on some crypto, hitting some spots, a couple earnings plays.
Nice, nice. I noticed. See, we're in that cycle right now where what we do 2 weeks ago, you look back and you're like, huh. But that's pretty standard with the oils and the metals. For me, the weed was still good, and a couple of those odd names we find, TMC, IRN, did really good. Momentum plays on news have been really well for me lately too. So I usually find one of those a day that either keep the lights on or you get a decent size in and just keep moving the stop loss up and it does good. The AI names were it this week. So yeah, good week overall. A little less is more. Spring break for me, so wasn't as active in the market, but still got my cup full for the most part. Wasn't as good as the last 2 weeks for me, but nonetheless, still a pretty good week.
I had my biggest day ever this week, and it wasn't really something I expected. So what happened was I was AVGO around 1400. I was actually trying to protect a long position and I got three puts for the next week. And that Thursday sell off happened, and they just flew right through in the money, just like 5 grand in like 45 minutes. And it's not really something I was aiming for or anything like that. And I mean, for me, the lesson I take from that is that the strategy on hedging that I try to develop has taken a long time and is working for me, and that sometimes they can just take off like that. I mean, especially with the 10-year yields climbing up a bit. So yeah, it's just kind of about finding your style and sort of the follow through on the work. Caution with the semiconductors led me to do that too. We can kind of see how they are reacting. So that was unexpected, but really, just kind of some nice icing on top of what already was a pretty good week for me.
Yeah, I think a lot of traders that's where they go, not necessarily wrong, but um, where they get distracted from is they'll get that and then they'll try to repeat the process instead of knowing that's just a byproduct of the process that happens occasionally. Um, if you stick to it, eventually you do hit the home runs here and there. And as long as you just keep being the Pete Rose base hitter, that's possible
Yeah.
again. But if you're out there just swinging for the fences every time, it ain't gonna happen. And usually it's those ones that I guess you kind of do see it coming that end up being the biggest winners, even though that's not the plan. Um, on the share side, it's a little different because it's usually a multiple day thing. But yeah, I'm glad you got a big one that worked for you this week.
Yeah, and MSTR is kind of similar on Fridays. I even put in my notes. I'm like, well, I'm going to get a put and just kind of swing for the fences here. But I only did that because the trades to the upside. To me, the way I look at it, the trades to the upside freed up the money to do that. So I had $600 up on coin in the morning. I'm like, okay, I'll take 300 of this, and we might get some weakness this afternoon. I know how those contracts move, and I'll go for that, and and that worked as well. And so the two key parts of that statement to me are the money used for the home run swing was already defined. It wasn't going to be a loss for the day if it flamed out. And then the other part is I know specifically how contracts move on that particular stock. So, a lot of people, I think they pile into something that's already moving and try for that without really knowing anything about options other than, this is going to go to the moon if I buy it. So yeah, I think you still need to have strategy. Lottos still need strategy. That's how I do the earnings stuff too. You still just have to have a plan. You have to define your risk. You have to know what you're getting into, and those three steps are things that I don't think a lot of people do to trade options.
And I also think people in that position, probably both sides, probably relevant to both sides, is when they get in that. home run position, rounding third base, they don't want to let go a lot of times too. And back to that, if you think it's repeatable, it's real easy to take the money. It's hard to get the top of everything. Um,
Oh yeah, yeah. That MSTR went over 6 grand, and I sold it for 2,500. But you're talking about zero DTE on a Friday afternoon. I mean, that can go to zero in 2 minutes. Like,
yeah,
so
yeah.
you just can't do that. I mean, that's just nuts. Yeah.
Yeah, I hope that's one thing you picked up from me because I preach it all the time. Like I kind of make fun of myself with having paper hands, but when you know it's repeatable, it's better for your mentality, your psychology, and then you don't miss the next one. Just knowing
Yeah.
that it's repeatable, because yeah, that happens to me. That happens to me constantly. I'm like, well, I took 5, 6, 7, 800 out of that, but it went for 3 or 4 grand. A lot of those momentum share plays, I don't get a lot of them. I just fill my cup. Um, as soon as they consolidate, I'm out. But they'll have 3 more legs up during the day. A lot of them. Um, and just currently re-entering, I just don't think there's a lot of volume in the market for re-entering. So
Yeah.
I'm looking for that pullback usually, being cheap. Just kind of my way of protecting myself in the most part. I assume it's same on options. Like you kind of wait for them to be cheap in the long run. Um,
Oh yeah. Well, and that's why if someone asked me about 2026 options and why I've been posting some of those, really it's in something like oil or copper, um, any metals really. I see like a sustained uptrend that's going to last for months in my view, right? And there's going to be pullbacks during that. When you get 2026, or they're basically like shares in terms of, theta doesn't really mess with them that much. So it just allows me to keep more of a move in something like that. I don't really feel like checking Cenex every day or AA every day
yeah,
when I had a great entry and the move's going to play out. It's probably going to $50. So, I just check in on it, periodically. And so for me, it's just about kind of preserving that mental capital and focusing day to day on the stuff that I know is going to be volatile and pull back a lot, like coin and, all those like that. So that's been kind of part of my process too, and something I learned. I mean, I don't know if you remember the first time we were traded AA. I didn't get close to all of that move, and
yeah.
I still got a great part of it. So this round, I'm just trying to keep a little more for something similar. I sort of see coming.
Yeah, no, the first time on AA, I definitely didn't get it all. I remember fat fingering a trade in AA one time too.
Oh yeah, yeah, yeah,
um, and this time, I guess probably just sector wide. A lot of those. For me, it's just keeping a position and kind of taking some off the table as we go, and then
yeah,
just having a stop loss either real close to the entry or at the spot that I took profit in a couple days. So if like A is a good example, we were in like 25s, 26s. I took some off the table at 30, but then my stop loss was at 28 on the rest of it, and then I took some again when we got up to 32, and then my stop loss is just right under 30. Um, then you just get more comfortable after you do that 2 or 3 times in that one trade to let the rest go. That's why sizing is important to me on there. Not that you want to oversize in the beginning, but you want to make sure you DCA, get a good chunk when you think something's oversold. And I mean, oversold is one of my favorite setups, especially oversold with a thesis and flow. Um, so the oils, gold, all that stuff, all the I forget the stuff that comes out of the earth. That's what my
yeah,
flat brain calls it. Like it was real easy to
yeah.
play those charts. The only ones I really paper handed were the miners because um, they're I guess they're I don't want to say it, but they're more the shitcos of the sector. I mean, there's some really good blue chips, some well-known names. AA is a great example of that. Um,
Yeah.
but like CDE, I didn't get all of that by any means.
Oh,
Uh, um,
they're very sensitive to news, and they can get some crummy deal on their leases or government steps in. Yeah, so they're a little bit like the crypto miners in that respect.
yes.
that they can do offerings or just have a shitty day while the commodity's doing fine. The going back to last week real quick, the something I said about silver, I just said like gets to 26 is probably going to take off. Well, it's at 27.50 now, and it
Yeah.
just did not stop. And that as I see Twitter traders trying to do weekly options on silver miners. That I just don't really know how to trade them like that. I think that what we had at our positioning when silver was at about 23, or if you wanted to wait a little bit for 24, um, all those took off. A lot of those silver miners are close to 100%. And I think one of the things I see from people who bought a couple leaps on those, back then, and then they took their money 70, 80%. And now they see those contracts are 300% and they're just getting some FOMO about it. I wouldn't really worry too much about that. I mean, I think that you did a great trade. There's still going to be plenty of opportunities, whether it's silver or or something else. So you don't feel like you have to get back in right away, and you just pat yourself on the back for having a good trade. And if you had two contracts, there's really no scaling in or scaling out at that point. So I don't think you have to worry too much about that.
Yeah, no, I think that's where the beef really comes in for our
Yeah,
room, like preaching that, especially on the smaller miners. I mean, they're what three to $5 stocks in the best case scenario. Usually, some of them are even less than that.
yeah,
It's not hard to get a position in there and take your time. I mean, kind of build a little bit of patience. The bigger names or the bigger oil names totally get more of an option play. Um, but with those all the stuff that we found, God, probably a month and a half ago, the shares positions were very easy to get, and usually that just needs not market euphoria, but just a decent market, and you're not going to go red on most of those. With the extra catalyst of the price of the commodities moving, almost really hard to not catch an uptrend on that.
yeah.
Currently uranium's that way. Like we haven't got the catalyst yet, but there's still are. I know several people in the room, including myself, Pele secondary. They're still making the cup fills off of those plays because the range is still there and the move is still or move or trend is still up from where they are from being oversold.
Yeah, and uranium futures consolidating in the upper 80s. The catalyst will send that back over 100, and then we go from there. It's I mean, to me, it's probably Europe, maybe a little bit in the US, but just the inevitability that these countries are going to have to go back to nuclear energy to have any kind of energy independence, and they can sort of just present that as being green if they feel like it.
Yeah.
I mean, it is pretty clean unless you have a disaster, but just day to day, it doesn't really pollute anything. So yeah, I think that story is going to still be out there for sure.
It, overall, just I mean, when did we do that energy summit? That every single thing we did on that list kind of took off. I mean, took off for what they are. Again, that timing of the market is crucial. But even like because you said green energy, even those plays did really well, and there's really hasn't been a catalyst for those besides they were oversold and just the rhetoric that we're gonna need more energy. We have more people. That continues to be like a long term theme of the world currently.
Yeah, yeah, and even solar, some of those pulled back Friday, but big pop on those. Enphase 112 to 126 in like 2 days. So
Yeah.
yeah, that's and those I think in particular are just kind of hopeful about rate cuts still. I think that's their big deal. But yeah, there's going to be some of those smalls too that we talk about uh, in the renewable energy or biofuel that I think are going to go 100, 300% share side. They're definitely set up for it in leaps. So it's just about staying on them.
Yeah, that might be the good thing about the election year is you kind of get both sides in that. You know, you get drill baby drill, and you get the clean energy plays at the same time in the hope that your team's gonna win. Um,
Yeah, and for weed, it's not even partisan anymore. I think it's just time. It's eventually going to happen, the legalization. So, you get for a long time in weed, it was sort of like the state by state news that would move it a little bit.
yep.
But we're getting into the part of the story where it's all about the federal angle, and in particular, the way that that would free up banking for those businesses is would be huge.
Yeah, we had the DEA mention something about a month and a half ago, which got my interest in it. And then of course I'm following it, looking to refresh the thesis. And then we had Germany kind of step up some legislation as well, and that moved the market very well. The continuation to hold up those plays, and then the range is just there once you're on them. So those have been really good for me. It's a sector that I've been around a while, so I guess it's not necessarily my oil to you, but it's one of those ones
Yeah.
that I just feel comfortable like knowing the names. Um, Outside of SNDL, I just won't trade that one.
Yeah, no, I think so. Tilray was a meme too, but I think it's sort of overcome that. I mean, the price is way down from where it was, but I just mean it doesn't have that kind of tainted quality to it. SNDL to me still does a little bit, and I can spot when I think SNDL is going to move. But the thing is, ACB and CGC and OG and Tilray,
Kron,
they're also moving, and they're just easier for me.
yeah, Kron.
Um,
No, I forgot who said play some ETF. And I was like, why aren't you playing YOLO? I mean, you want an
yeah,
ETF
yeah.
where a sector's lifting. Um, I think that's always best is to find
Yeah, it
something like
was it
that.
was it was tan. It was while solar was going, and the question was about tan. And the thing about I look at tan, but the problem with it is you get kind of muted move up compared to what the individual names are doing, and then the struggling names are also going to weigh it down. You're just not going to get the range, and the option spread is not any good either. So I don't know why you would look there when you've got, if you want the big ones, you got First Solar, you've got Enphase, Sedge moves huge because of how destroyed it's been, and then you got the smalls. So the beef trade in solar to me is not run options or Nova options. It's run and Nova shares, and then it's First Solar and Enphase, options, and then some Sedge in there, as well. So
Yeah.
it's kind of a sector wide burger I'm building there, but that's how I typically trade those.
Yeah, well, I think you know those bigger charts too well, so that kind of helps you in the option game. But
Yeah.
it's a long term play. I mean, we're early. When you're early, you got to give yourself time, and that time attrition on options um, just doesn't really work if that's your main piece of if that's your meat, cheese,
Well,
and
yeah, and
bacon
I
on the
mean,
burger.
Enphase 10% in 2 days, minus 7% Friday. That's hard to swing. Like you can't really swing that with options. You're not going to take a 7% drawdown after going up that much. You just would never do that. So yeah, you just keep hitting it. It hits the spots on the chart, and trade it again. And to me, it's all about just building up that silver, or not silver, that solar pool of money. And I've been DCAing First Solar shares because I think that has the most stability, and we'll catch a great move to the upside. Phase is rough, if you're trying to swing. So yeah, knowing the character of the stock too matters a lot.
Yeah, I was gonna say that's probably the missed point of that is when you are early, instead of trying to be profitable from day one on every single trade. Just watching the chart and understand how the options and shares move.
Yeah.
We'll show you when the move does come. You'll know because it's going to be way different. You're going to see like this has done this for maybe a month, maybe 2 months. This has done this, and now it's moving. The weed names for me were that way. You could just tell that this isn't the normal price action or this isn't the normal amount of volume going on with these newses, and I think that really helps you instead of bouncing around a little bit.
Yes, and then one more thing I'll say that actually weed and solar to me have in common is that their moves are independent of SPY and to a large extent. And Enphase did a huge uptrend while SPY was struggling previously. Not saying that's going to happen again, but there's a lot of situations where Enphase and some of those others like they'll have a really good day while SPY is flat or selling off, or they'll have a really bad day while SPY's ripping or whatever. So they're a little bit detached from that. They kind of do their own thing. Part of the reason I do like to trade them, because of that. But as the market, which I can think might continue to happen, gets a little bit skittish with some of these, the semiconductors and large tech that's been carrying it. Like I said, the 10 years going up. Um, finding those sectors that are kind of in their own world is a big strength of what we do, and I think something that will definitely continue for us going forward.
Definitely. And kind of switch gears a little bit. I've had a question for you for a few weeks, and now I got to ask it because it hasn't gone away. And not to put you on the spot or take a bunch of time, but what the hell are we doing with these fucking shitco crypto soul thing? What's going on over there? You know, Unc doesn't mess around with all that.
Oh yeah, yeah. Okay. So, all right, the Solana coins, right? So for me, like I trade things that I can feel like I can read, right? There's no option flow in these little shit coins, um, but I feel like I've gotten a read on how these work, and while kind of while they're hot right now, and the way that the stories rotate and which coins have strength and all that. And so I've just been trying to just give people sort of a roadmap on that. I don't bet on sports or anything like that, but it's just been kind of more of a weekend pursuit for me. I'm just kind of sharing what I'm learning about it. Um, it's a crazy space, and the coin swaps and all that. You get a lot of failures to it, so like it's definitely something you go very small. But there's a lot of $10 turning into 70 and
Oh, nice.
50 turning into 300.
Are these like new coins? This is me. I'm just ignorant to it. Are these
Yeah,
new
yeah.
new
So they're
coins? Is it a new
yes.
exchange or what's the whole
Well, no,
backstory here?
Solana's been around a long time, but the advantage to Solana over Ethereum is the fees are minuscule. So like if you I don't know if you remember the Pepe frog. You've seen
Sure,
that meme before, but
sure.
so there was an Ethereum coin of Pepe. It's still around. But if you wanted to buy $100 of Pepe, it cost you $22 in gas fees on Ethereum.
Okay.
Solana, you swap these coins back and forth. It costs you pennies. So someone made this corny Joe Biden coin, right, and released it, and it took off. And so then there were all these copycats. And at this point, um, there's anytime something hits the news, someone makes a little shitcoin about it, and it'll pump. So there's just a ton of liquidity in that space right now, and you can get caught in rug pulls and all that. But a lot of them take off. So it's sort of like if you can be a 300 hitter for your $10 positions, you're gonna double, triple your money right now the way the space is. So that's why I've been doing that. But
Interesting.
just kind of a fun little thing.
Is the hot dog going to a buck 50 or what?
It's I mean that's the story about it, but there's sort of it's like a run up happening where like right now it's gone from 6 to 10 cents like three times,
Oh,
and so
jeez.
yeah,
There's a good percentage there for sure.
yeah,
All
yeah.
right, enough of that. Yeah, just I thought it would be a weekend or two thing, and it seems to be hanging out. Like there's some momentum to it, for lack of better
Yeah, so
words.
buying a 150 to 1500 in those 2 weeks. That's how it's gone for me. And then I've just so at this point, like I took most of that about like over half of that I just withdrew, and now I'm just leaving what's left and just seeing what I can do with it.
Nice, nice. It looks like a good time for sure. But
Yeah.
yeah, uh, I just notice it, so it's kind of more of an after hours or weekend
Yeah, and I'm,
thing.
I'm trying not to. I try not to fill our space too much with it. So maybe I feel like if I make a channel about it, that's going to be the top or something. But yeah, so I try to keep people focused. I had a little bit of concern about it. I try to really emphasize how small these positions are because I don't want someone to just pile in there. It's kind of like if I bring up AMC or GME. I learned my lesson on that. Um, because I can see a 5% move in GME, but then someone like the way that they gravitate towards it, and that becomes the sole focus. Like I definitely am mindful of that kind of thing too.
So it's basically internet scratch tickets. That's what it sounds like to me.
Exactly what
You're
it
over there
is. Yeah.
playing some pull tabs.
Yeah.
Um,
Now,
um,
I had a question. I had a question for you that's sort of related to the the way that our room works.
sure, sure.
If someone wants to bring up a ticker to you, what's kind of the checklist of this is the bare minimum homework you should have done before you bring a ticker to the space. And this is for someone, I mean, we have some people who I think are pretty well established at this point, and we know their process and so you kind of build that rapport, I think you can just bring something up. But I'm talking about someone who's newer, who's learning, doing some of their own work. What should they do to bring a ticker to the space?
I I really want it to be a bigger thesis than you guys are on, let's say semiconductors, or we're on semiconductors, or you guys are on crypto, and this is just a crypto chart. I
Yeah.
want it to have more of a reason than that. I don't expect you to have a level, but I would like you to have a level picked out on the chart, and where you would trade it, why you would trade it. Is it over like some anything but a goddamn head and shoulders, bull flag, bear flag, inverted peg, what the fuck ever language you want to use. Some real shit that we kind of teach that you are applying to a chart is what I'm looking for. All the other stuff, and I'm gonna be upfront. I'm gonna be biased on whatever anyone brings because, again, we are pretty thorough. So if you think you're finding something that I'm missing or you're missing, not necessarily disrespectful, but it's off-putting in general. If it was one of the good ones, the blue chips of the sector, or the best setup currently, I'm pretty sure me and you would have brought it to the table at some point in time.
Yeah.
So if it's brand new, yeah, that's kind of what I'm looking for is why lots of the regular checklists that you're just doing that yourself. I found an oversold chart. They did just have news. Their last ER was good. It's been consolidating on this level for a while. That's really what I would like to see. And a lot of times it's not. It's just what about this one? And
Yeah.
that's I'm gonna put as much time in as you. That's the nicest way I'm gonna say that. As much time as you put into it before is as much time as I'm gonna put into it after you ask me.
Yeah, no, I'm definitely with you there, and I think if for me, if it's something that we've been on, I mean, especially with these large caps, and they've made a move into some new territory, like Ulta had a big drop. Now,
Yeah.
Ulta, I did post a lot about, but let's say I hadn't. If I hadn't said anything about Ulta, it dropped 15% in one day, and someone asked me, "Are there any levels down here for Ulta?" That to me is a good question, and so I'm cool with that. Even if they don't have a big thesis about a level, but they're noticing, this made a big move. Is Flow responding, to that? The ones that I'm more leery about are like a sector that has made a big move, and then someone just trying to find the lagger themselves just by looking at a chart. That isn't quite enough. I think that this is a flow and TA room, and it's TA of a particular type. And I think recognizing that is important. So this is what you're talking about with pegs and head and shoulders, and
Yeah.
if it's vocabulary we're not using, we're probably not that interested in it. But yeah, if you want to build a thesis around option flow or the RTL, I think that certainly can work because we do want people to learn. Um, there's just so much good work here that I think you can just build off of what we do. I think that should kind of be your first point. But yeah, if people notice things that I do want to see it, but you have to put a little bit of work into it before you bring it in to the space. That's my take on it.
I definitely react more kindly to oversold than overbought.
Yeah, yeah,
Just because that's my style and that's what I'm trying to pass along to people is to be cheap for the lack of a better term. So if you have a chart that is just already made a 200 or 300% move, um, I'm not going to be open to trading it because I feel like I missed the bus. Alta's a great example. I mean, I would love people ask me a question after a red candle like that because we can figure out where the level is, which I do have one on that. Search the group, that
yeah,
also works. And we can figure out why it happened and if it was worth that. And I think that's being more proactive in what we do. As far as the TA shapes and stuff goes, I mean, I'm pretty adamant and about what I post. I mean, if you look at any of my notes, they're either historical volume profile levels, and then SMAs are mixed in. And I'll be upfront why I use the 200 and the 50 on the larger time frames. Is that's what a lot of the I don't know who you like the hedge funds or who the hell ever the big money. That's where their algos operate at. I mean, it just is what it is. They don't.
Oh, I mean, option buys pile in at those levels. I don't even know
Yeah,
what they are. I don't really look at them, but it's just interesting how those correspond. It's like it's just automatic. It hits that 200, and here come the
yeah.
buyers.
Yeah,
Yeah,
that's just when like they created algos back in the day.
yeah,
That's just what their parameters were was buying off averages, and those are the averages that the old gray-haired men in glass. That's what Buffett uses. It just
right,
is. I mean that's the origin of DCA. Is I want the best dollar cost average over a 200 day or 200 week price. That's where I want to buy. Is where it's been the best price. And when you get that in your mind, I think you're a better trader and investor long term because that's how you pick up stuff. Is not necessarily with the big fish, but at the better price. I mean, you're getting the 200-day average and not the weekly, you know, the weekly run that looks like, oh, this is moving now. And I just think it's the best place to start, stay, and how to keep it simple when trading. The back end of that though is you're not going to be able to trade what you want when you want. You have to wait for it to come to you. And to kind of touch base back on the bringing stuff into the room, I mean I think that's the elephant in the room we don't talk about is we limit them. There's a lot of stocks. I mean, you could go search gold or silver, and you're going to get like 150 results for tickers,
yeah,
and we really limit the market to I don't want to throw a number on it, but we really limit the market down to let's say 5% of the total market. So you can stay inside stuff that's going to be tradable, not necessarily the best companies, but just the best ranges, the best activity, the best liquidity, and stuff like that. So it is actually tradable. And I don't think a lot of people notice that we're basically. I mean, because it's hard if you're out there by yourself, looking at all the tickers. Um, I've been there. It's not easy. There's a lot of things to trade, and that we limit it. I mean, that's what I get from you, to be honest. That's like 80% of the reason why I wanted to work with you is because we really can focus on where money's at instead
yeah,
of having that broad picture of the market and just having to worry about everything.
yeah. Totally with you on that. So use the work. I mean, that's the main
Yeah.
that's the main thing. My main thesis there.
Like I
Use the
don't
work.
want to trade oil without you. I mean, that's just not a thing. Um,
Yeah,
there's a
yeah,
lot of there's a lot that I mean, like especially when you get into the different areas of oil, right? Like from the ones that bring it out of the ground, the ones that refine it, the ones that ship it, the ones that sell it. I mean, there's a lot going on that side, and it's just hard to do um, on your own, and it's hard to do with that broad of a spectrum. So I think like it just goes unnoticed that that's really what we do is limit the market to the best activity. Um, yeah. Something I think about all the time. Like,
Yeah, and I see it with people trying to read option flow all the time, where they really don't know my whole process, and um, just seeing some buyers on a contract, there's a lot more to it than that. And so most Twitter option flow is just like, floor sweeper, Nvidia 1000C, and it's, but there's just you read stocks differently depending on a lot of different factors. There's a lot of noise in option flow, and I don't think most people even scratch the surface of everything you got to do to actually get something reliable out of that data.
yeah, the same with TA, Twitter TA, same thing. It's just bias
Yeah,
confirmation. Like you're just finding whatever head and shoulders inverted whatever the fuck that fits your narrative. It's not really there.
yeah,
It's just something that you have a bias and you're looking for confirmation through some bullshit.
it's a confirmation bias fallacy is literally what it is, and especially on the smaller time frames. Anyone ever wants to, I won't get into some lecture on it, but just look up the phrase Brownian motion, and that's what the stock market is. It's random points within a trend, and the that randomness increases the smaller the time frame, and you can easily get caught in seeing shapes in the clouds, for lack of a better term. And so that's a lot of what happens. And then the survivorship bias of seeing the people on Twitter who make it or create the narrative that they made it just leads more people into risky trades where you have no edge. So that's why the 90% of traders fail or whatever. Like all of that definitely feeds into it.
Some blind leading the blind over there.
Yeah.
Second question I had for you, a little more serious note, and it will lead into SPY, so I'm okay with it being this late in the video. What the hell happened Thursday? Was that the Fed saying the rates we're not cutting them this year? Was that Blinkton talking about we're just going to go ahead and start World War III or something else? What was going on Thursday to make that drop?
Yeah, I mean it was a Fed speaker. What was his name? Uh,
I don't know. They all talked last week.
yeah. It was right. So it was the potential of inflation worries and the long shot that we would need to hike. I think was what sparked it.
So
And
you think it was that, not the NATO stuff?
yes,
Okay,
to me,
okay,
yeah,
okay,
I think
okay.
so.
No, the jobs report too was the third wheel of that. I mean, I seen a graph that 1.5, and they're calling them Native Americans, which I think they need a better terms than because you kind of
Yeah,
get
yeah,
confused
right,
on
right.
that. 1.5 million negative jobs for Native Americans in the last few years, and then 3 million jobs to migrant people in the last few years has been the actual what's propping up the job market, and how
Yeah,
they don't count them in the I guess in the total. So we're adding things that aren't in the total. Um, that too, I think is going to be an ongoing issue um, because people will stop believing the jobs are strong. Um, I don't think we're going to get. I mean, I was April May on the rate cuts, and I I know historically they don't want to cut like Q3 because it's too close to the
right.
election. That's something they just don't usually do. So we are kind of in a bind where they're not going to cut rates this year if they don't do it soon. Um, yeah, your thoughts on that?
Yeah, so I think the the fact that we sold off, is that can be just kind of an afternoon thing, whatever. But it was the follow through on it that's not typical, and that we haven't really seen. And I think mechanically within the market, um, the 10-year kind of crawling up gives it gives us more room for downside during an event like that. And then you did see the bounce the next day. So the biggest lessons I see there, I mean, that was when I had my hedge for AVGO. Puts are cheap right now, so I think find a way to hedge if you're wanting to stay long in some stuff. And then don't chase puts is the lesson too, because you saw a lot of people flip bearish Thursday afternoon and then just get smacked right in the face on Friday. So I think that we still are going to have a lot of bounce and resiliency, particularly within some sectors.
My quick notes there is what I look for in that situation is what doesn't go that way, right? What holds its own, kind of dances to its own tune in the pullback. That's why
Yeah,
Root kind of made an appearance. That's exactly what that was. And then the volume coming back. That kind of was the biggest concern to me. The drop I've been waiting for, like about fucking time, to be honest with you.
yeah,
Got lucky calling that candle last week that we'd get a little pullback. The 520 thing, we didn't make it there, but the volume was probably the most concerning of the whole event. The volume afterwards, and it was only Friday, so that might change Monday. Like we might get back, but it was pretty low volume Friday across the board, which is how you're gonna bounce back. You want the dips to be bought up. That shows strength. And I mean, we're
yeah.
going off one day, but I didn't see it on my side, and I don't know how it looked on your side. Um,
Well, yeah. So when one of the ways I look at volume when I'm in a trade, if the volume isn't backing it up, I just go ahead and get out because I think
yeah,
a pullback's going to happen. So AVGO, I went pop 3%, but the volume was about half or less of what it is on a typical day. And I'm like, man, on a Friday, this isn't gonna last. You don't run into close with that. So I went ahead and got out, even though my target was about $20 higher. You can just see the way Fridays work. You get one move, and then you find a kind of equilibrium, and it's either going to close close to where we opened, or a little above, a little below. But yeah, that's volumes. The follow through is going to need volume, and so I'm totally with you there.
yeah. AVGO, just a quick run there, had 55% volume on Friday of a 30-day
Yeah,
average.
yeah,
So I mean, and that was across the. It's not that was not just particular to them. That was pretty much everything on Friday. So I'm mindful of that going forward. Back to the spies part, I'm mindful for that to go forward, going forward, because if we don't get volume, I think we have kind of found a top here for a while. Um, we've come a long way though. I mean, some pullback to a level would be healthy in my opinion. Um, Not necessarily the September to January thesis kind of pullback, but just a little bit of relief. Um, Again, coupled with some strength of it being bought up, I think would be healthy for the market currently.
yeah, yeah. Totally with you.
Um, but again, we'll find sectors and things that have catalysts that will march to their own tune. So, um, what do you got on Spy this week? Let's do that and get out of here.
Um, so I'm seeing. I mean, the dominant story on Spy is that about the top 20 contracts in open interest are puts that are pretty much dead. So on April 19th, a lot of that stuff's going to drop off the books, and the picture will start to clear up a bit. But what I do see for upside, this 419 526C, some big sweeper orders in the millions coming in late Thursday, and then through Friday. So that to me kind of sets up what I would say, like, for this week. You need to keep those relevant, and we gotta end up in like the lower 520s for this week for that to be relevant to me. So that kind of puts my top at around, I guess, 524.45, where I'm going to say my top is for SPY. And then downside is a little bit further out. So it's in mostly like May. And at May 517, 494.
Oh
That's
wow,
pretty low.
yeah,
But with a contract like that, how sometimes it works is they're not really trying to get to there, but they want to bring us. They want to close the month under like 510 or something like that. So my most confident read's actually a little further out than this week, but I will say like my downside for this week I'm going to say is going to be around 513.95. So I'll set that.
You got a wide spread compared to me. I'm a little. I rewrote my numbers down. I'm pretty tight this week, um, just because I think it would be healthy for the market. 520,
Mhm.
523.05 is my top, which is the 20-day average daily volume profile in the 1 hour. Thank God I can finally pull a level not out my ass for the top side because that's what we've been doing the last month and a half in here. And then downside again, you want the dips to be defended. So 509.69, shout out Goose. I think 510 is going to be defended short term. Um, yeah, I do think we kind of get maybe another sideways week or two. Um, no matter the direction we go, I think that has to happen first, and I think the clarity will come over the next 2 weeks. It's not here today. After we just don't have enough time after Thursday to see the actual reaction in the market. So a little tighter than you, but still, we're talking $14 to $20 ranges on SPY, which is, lack of better terms, very tradable, I would think, in the
Yeah,
market.
yeah.
Quite golden question is, and I thought we were getting it Friday. I mean, we did, and they pulled it back under for some reason. But 520 close into the week. That's still the question, and that lingers out there for me.
Uh, yes, yeah, I
Yeah,
think we do.
yes, and um, I'm on the fence. Tell me why. Tell me why you say yes.
Well,
Sorry to put
I
you on the
think we're just
spot.
going to have a pretty strong close to the week, and as we get into Q2, um, I just see some dips being bought. Some of these semis are oversold. I still think funds want to have those on their books, and they're just looking for a better price. So mainly, I think it's just going to be a rally led by Nvidia, AMD's of the world.
Perfect.
That's my take.
Awesome. Well, I'm gonna go. I'll go yes with you just because um, it should have happened Friday. The volume just wasn't there. So I do think that number they want. Um, Kind of feels like we're gonna have a good start to the week. Maybe run into some numbers somewhere middle of the week, and then that dip gets bought up as well. Very volatile week, in my opinion, going forward.
There's some possible stock splits going to happen. I think SMCI, AVGO. I think everyone's kind of on the edge of their seat waiting for that, and those that would move the queues quite a bit. I think so.
Perfect.
Kind of looking for stuff like that too.
Perfect. Alrighty, sir. I guess it's a good time to say like and subscribe. There's a
Yes.
link somewhere. There's a link somewhere. You ready to get to work, Pete?
Yeah. I'll grab a coffee and we'll hit
Perfect.
it.